Stocks extending gains at the open as tech and chip makers rally on the heels of solid earnings reports here. Netflix, the biggest gainer in the S&P 500, surging 10%, 11% now higher. Here with more, we've got Keith Bliss, BloxCross Global Head of Markets and Strategy, here with us in studio. Keith, great to see you. I mean, when we think about some of the catalysts that could continue to drive markets, is it as simple as some of these earnings coming in perhaps better than expected, and for what we had seen coming into this week, beating on maybe a core figure, which is margins as well, and going past some of the expectations?
Yeah, certainly in the short term, Brad, that's correct. When you look at it, and I tend to look at the market in 3-month chunks of time, and try and figure out what's going to be the strategy going that way. And in the first 3 months, certainly we've got 2 Fed meetings in the first 3 months of the calendar year. They're not going to do anything. Hopefully they'll continue to give us a little bit more salve about what the back half of the year is going to be like. So that's a catalyst or a macro issue that I kind of put to the side for the moment. So it is all around the earnings season right now. It's going to be around what the interest rate sensitive cyclical names are saying. We got a good report out of Procter & Gamble the other day and what they said. So that's a company in the staple sector that's saying, yep, the consumer's still strong. They've adjusted to the price increases. But more importantly, what's going to drive the market is the Magnificent Seven rides again and continues to ride. And an old FANG name, Netflix, is technically not in the Magnificent Seven, if you want to say that. They absolutely hit it out of the park with their number, and I'm getting close to saying game, set, match for Netflix on all the other streaming services, because they figured it out. Now they've built these barriers to entry, and either Paramount, Disney, Comcast, all those companies, they start pouring more money into it, which of course their shareholders are saying don't do anymore. Netflix will continue to be the big winner here, and that will continue to drive the market, NASDAQ especially, but then the S&P 500.
Yeah, Keith, we were talking to Jason Bazinet from Citi at the top of the show. He covers Netflix, and he was saying a very similar tune, just in terms of the fact that they are by far the leader in this space. No one near them in terms of who would potentially be able to catch up with them, at least within the streaming space. But going back to what you just said about the Mag 7 names, do you expect to see strength from all 7 of those names? Or I guess who do you think is really going to show some leadership here this year?
Well, I do think the big tech names, whether you're looking at Alphabet, Amazon, or Microsoft, they have really good core businesses. And believe it or not, the AI trade is still going to be on. And the AI trade is still going to be on because we're still digitizing the world, we're still wiring it up. And the big thing in AI is around cybersecurity. So you just can't perform a proper cybersecurity across your platform unless you're investing and implementing AI quite a lot along those platforms. You'll see individual names, Shauna, around the Magnificent Seven and the old FANG names. Again, Netflix is technically not part of the Mag 7. That will outperform. And then I truly believe you're going to see a name like Tesla really come back. It's at a price level where rumors that I hear in the conversations that I have, everybody's whispering, is like, now's the time to catch a bid on that name, and especially if Elon Musk comes back in. He's posturing a little bit with his board right now about things like that, but if he comes back in, he assumes more control. They're going to be the Netflix of the EV market. The problem in the EV market right now is coming out of the big 3 and some of the smaller players. Mm-hmm. People have gotten to the point where they're not buying Tesla because it's an EV. They're buying Tesla because it's a Tesla, and that'll continue that. So I think they'll right the ship a little bit and they'll get back on course. So the Mag 7 will drive the market certainly in the short term, especially as the Fed stays pat and interest rate sensitive stocks are not able to gain traction right now. My main worry, if I may, just one more counterpoint to that, is my main worry is we've got to start broadening out this rally if we want it to make it really sustainable into 25. I don't think 24 is a big deal. There's going to be a macro overlay that's going to help us here. Mm-hmm. But really into 25, we need to see more of those names downstream in the NAS 100, downstream in the S&P 500, really kickstart their earnings and do well.
Is there a bellwether earnings report from your perspective that presents the biggest downside risk to this rally right now?
Currently, I can't see it. The only one that I really would point to, again, in the very near term, Brad, is IBM. IBM reports tonight. And IBM, I think, is an important story because, they go from, we think about what they did 50 years ago, right? Big cabinets sitting on 4 floors inside of a beautiful building like you guys have here. And now 75% of their revenue comes from software and consulting. Right. And one of the big drivers that they're looking at in the consulting business is around consulting companies on their AI implementation. They got a boost in the market yesterday because Taiwan Semiconductor has come out and said that their earnings, they expect to have a 20% year-on-year growth, and a lot of that is around providing AI components that go into the chips of Nvidia. So I'm really curious to see what IBM says in the short term about that, and that will underscore my thesis earlier that the AI trade and the cybersecurity trade is still on.
Keith, I'm curious what you make of the developments that we're getting out of China. Certainly a trending topic here at Yahoo Finance. China saying that's going to cut the reserve of requirement ratio for banks within 2 weeks, also hinting at maybe more support measures that could be to come down the line. Are you seeing investment opportunity there? And I guess what's your main takeaway from some of the instability or the fact that the recovery has taken much longer than what many forecasters had initially anticipated? What's the main message then to investors?
You know, my message to myself and investors is I think you can stay away from China for the next 9 to 12 months, and it's not going to hurt you. It's going to take some time for their policy changes to roll through the economy. And if you've ever traveled to China, you'll know what I mean by this statement. If you drive out on the frontiers of China, you'll see more high-rise construction booms than anywhere else in the world. They're still there, and they've built a lot of commercial real estate in that country, which they've got a problem with. The bill is coming due on those things, and they're not able to make that an earning or a useful asset. So that's one of the things that they're facing with right now. Why their stock market, their equity market, has started to take a hit, because people are looking at it overall and saying, is this a good investment structure when the Chinese government may have to come out and bail out billions upon billions of dollars in bad real estate loans? So again, I'm encouraged that they are taking some steps to do some things and right the ship. You'll probably see more over the summer, because it will be, they'll throw out a lot of money and they may gain an inch or a foot at a time, as opposed to several yards, a breakaway run through the middle, so to speak. In China, let's face it, I mean, it is what it is. China has President Xi and his council. They wake up every morning and they got to figure out how to feed 1.4 billion people. And if the economy really tanks, that's an issue. And the last thing they want is social unrest, while there's still some political instability around the world, and while there's an election in the U.S. coming up. So they're trying to figure out which direction they're going to go in 25 and beyond.
Certainly a lot of things investors need to keep in mind, of course, and also just bringing up your last point there, just in terms of policy and exactly what that's going to look like if we do see a switch in the White House. All right, Keith, always great to have you. Thanks so much for coming in and stopping by the studio here with us today.
Yeah, my pleasure.